We just sent $33 billion in militarized aid to Ukraine. Some central banks are reporting losses. We are now seeing flash crashes. Let's get into our crypto news because it is good. Pelosi can go into a war zone to check on Ukraine, but hasn't been able to take a plane ride down to our southern border all year long. Rosie Rios had issued more currency than anyone in history. Pretty sure that's why she sits on Ripple's board too. If you're a snowflake that gets offended, then you've probably already left anyway, so good luck. God bless. Every country is going through its own unique situation right now. So wherever you're tuning in, which folks in China probably can't even tap into this stream, but let's talk about this. Chinese real estate market is considered the most important sector in the world. The total value stands at $60 trillion, more than the entire US equity market and 2 times our housing market. It's unraveling now with the S&P predicting another 30% drop, 1.5 times worse than the 2008 crash. So this Chinese property market has gone absolutely bust. Continuing on, Chinese citizens are obsessed with real estate. And by the way, this is from Market Sentiment on Twitter. Huge shout out, Market Sentiment. Chinese citizens are obsessed with real estate as their stock market is completely opaque and still hasn't recovered from the 2008 crash. It was the real estate market that propelled China's rapid growth ever since the 2008 crisis. As investors piled onto real estate, 70% of China's household wealth is now tied to properties. The real estate craze was so high that buyers had to pay up to 30% of the home value and start paying their mortgage even before the construction started. As with all types of hype bubbles, people thought that the value of real estate would never decrease. Home buyers would spend as much as 23 times their annual income to buy a home, with the mortgage sometimes taking up more than half their gross take-home pay. This led to property developers creating a Ponzi scheme where they sell projects that haven't yet started and use that money to start other projects, and the cycle continues. The problem became public when the pre-sale properties were not being completed. So they got the charts here to show this, to verify this data, these statements. As more and more properties fell behind on constructions, buyers have staged a mortgage boycott, where all home buyers with outstanding mortgage loans will stop paying unless construction resumes. This is a vicious cycle where home buyers are halting mortgage payments, which then would strain the property developers, causing further construction delays. Sales of apartments nationwide have slumped annually for 13 consecutive months, forcing the government to step in. The United States Federal Reserve even came on record to say that the fragility in China's real estate sector could spread to the US if it deteriorated dramatically. China, instead of playing it safe, has done the unthinkable by lowering interest rates and injecting more money into the economy as a last-ditch effort to stay afloat for a little bit longer. But economists think that this could be too little, too late, and too inefficient. Same story that's happening in the United States. Spoiler alert. I'm going to go over the United States data in the next post. Spoiler alert, same situation taking place right here. As Goldman Sachs pointed out, mortgage boycotts have made people reluctant to buy a home, which resulted in 30% lower sales. So now people aren't even buying real estate, period. Right? The whole thing's just basically shut down. The most important asset class in the world. This in turn reflects a loss of confidence in the housing market and throughout the entire economy. Since China publishes its own numbers and maintains an extremely tight grip on the economy, they can keep kicking the can further and further into the future. But eventually data will come out and it's going to have serious consequences in the US as well. The US has substantially increased investment in China over the past decade. Talk about BlackRock too. Adding to this, the US equity market has also exposure to Chinese companies. The direct impact might be low, but the perception of things getting worse could have ripple effects on our markets. Wow. You don't say. Ripple effects on our markets. Really? The direct impact might be low, but the perception of things getting worse could have ripple effects on our markets, i.e., it's going to get a whole lot worse.